Hi everyone, LJ Naga here, and this week I'm going to talk to you about a question that I received from one of our clients. They said, LJ, the market's super hot. I know that obviously you keep thinking that it's going to keep going up, and that's fine. But what happens if the market were to slow down in 2 years' time and we were actually see a dip in prices? What do I do then? And the answer really depends on what do you need to do at that point. If you're staying in your home and prices have gone down, there's no real impact to you. You have a home, you have a roof over your head, you're going to continue paying your mortgage, and you're going to be okay financially. If you were planning on selling at that time or refinancing or making some sort of financial move, then obviously you're going to be a little bit more handicapped than you would expect it to be. In my opinion, we're going to see prices go up over the next little while. So even if there were to be a slight correction, you're probably still going to be in the money. I'm not very concerned about you not being in the money and there being a severe correction. The reality is that we live in Canada. And Canada is always a socialist country, which means that we're looking to protect, obviously, the general population. And because of that, in my opinion, they're never going to spike interest rates on us very, very quickly. It wouldn't be in the government's best interest because if they were to do that, most of the unemployment rates are going to go up because companies have to close down and the government of Canada is going to have to absorb that unemployment. And therefore, at the end of the day, they're going to have to take money from the right pocket to feed the left pocket. And I don't think that makes much financial sense. Therefore, are we going to see an increase in interest rates? 100%. They're at 145 variable, 230 5-year fixed. These are historic lows still, and you might argue that they were even lower last year. They were, but they're still very, very low today, and they can only really naturally go up. I keep remembering January 2019, where we had interest rates at about 3.8%. And I think that in the next 5 years, we probably will get closer to those numbers again because the government will be looking to get a more balanced market. What happens, really, like I said, comes down to what you need to do at that point. You're obviously going to make the decision that you have in front of you at that point. If you have to sell, you don't have an opportunity to wait, you want to still keep cruising on a high, then you're simply going to wait it out. If you need to make a move, then obviously timing is everything. Whenever it comes to any financial instrument, whether it's stocks, real estate, a business, whatever it might be, timing is kind of the most important thing. So timing the market is not really going to be in your favor, but if you can hold off at that point, I am sure that you'll see the market go right back up within a year, year and a half again, because if there is a correction, it'll be for a very short period of time. Thank you so much for watching. I look forward to seeing you guys next week. Have a great week. Take care.